Hey! Hello there, fellow trader. Welcome to this overview of the Price Finder indicator, currently available for the TradingView platform. Please join me as I present to you how it works, and also some of the nice results we got during its beta phase, plus sample usages. I believe you will like it. So, let's go to it. Okay. Price Finder is a technical analysis indicator, built on a solid mathematical foundation, and also in recognition of price's fractal, multi-layered nature. This is a key aspect, based on the multiple time frames process that different size traders use to make their decisions. The objective of the indicator, of course, is to help identify high probability trade opportunities, especially those with good return risk ratios. And by that I mean greater than 3-to-1. This is very important to promote sustainable equity growth over time. The indicator also helps identify price state, in terms of trend and consolidation. Meaning that, if price is trending, you can expect it to go farther, either higher or lower, in a more consistent way. Or, if it is consolidating, traders are more intensively fighting, and direction is not so clear. And last but not least, very importantly in fact, the indicator helps identify the new positions of previously successful support and resistance levels, out of both its mathematical approach, and empirical evidence. I'm going to get into more detail about this later on, but essentially what happens is that these support and resistance levels move, and this is very important to pay attention to, and can provide a really good edge. So, before getting into more details, I'd like to show you a bit of the results from the beta phase we ran for a while. I got very nice feedback from participants. Thank you very much to all of you who joined the beta and provided such great input. I'm very happy with all of it. To the audience here, if you want to take a look at these, please pause the video and check for yourself. Here are also some sample trades I've got reported. Very happy with the results you got indeed, folks. Congratulations! So, after seeing a good evidence indicator works, let's talk then about how it does that. Basically, the indicator is composed of a trend band and two expansion threshold bands. Let's talk first about the trend band. The trend band helps you understand if you should be leading bullish or bearish, considering the time frame you are looking at. It shows inflection points, also known as death crosses and golden crosses. It also provides a middle line, which helps you measure if price is leaning towards crossing to the other side of the band or not. Here are some examples of how lines can help identify potential good places to have new trades. After we have an inflection, first time price touches these lines, it tends to react in favor of the trend. So, it's a good place to try to buy or to sell, depending on whether band is oriented to the upside or downside. This can be done either over the line itself, or after a pivot. Really interesting things to consider. Another example, if price is trending up and then starts to get inside trend band, and especially starting to suffer resistance from its upper line, you can probably think trend is showing weakness, and this may be an interesting place to take profit, some or all, or to go short. Always managing your risk, of course. Pivots are safer for that matter, as they provide closer stop-loss levels. We see here also examples for shorting after trend band turns, and price touches it from below. Also when price touches middle line from below, or even the highest line. And then vice versa, buying when touching the lowest line from above. So, various interesting opportunities for trades here on this chart. Next, what about expansion thresholds? So, we see price going towards a direction, but how far can it go? Expansion threshold bands help us understand some potential limits, or places where price is likely going to have to make a decision, whether or not it is going to continue expanding in that direction, or if it will revert. Here we see Bitcoin's 15 minutes chart. As we know, it has been in a major uptrend. Of course, in this example, it was retracing locally. But once it hit this 15 minutes lower expansion threshold, it managed to find support. It worked pretty well. Actually, this support was tested and respected 3 times. Conversely, upper threshold was tested and broken twice. So, this is an important aspect to keep in mind. On uptrends, lower threshold bands are often respected, and upper ones often broken for a while. The reverse also happens. On downtrends, lower thresholds are often broken, and upper ones often respected, also for a while. When price fails breaking an expansion threshold, it will then go try the counterpart of that threshold. So, in the case we see here, price has failed to break 15 minutes support band. And the obvious thing for price to do if it can't go down is to try to go up, right? So, as we can see, price started to rise. Of course, before reaching the upper threshold band, it had to face trend band in the middle. Most often, trend band is going to play a role in such cases. Usually, at first try there's a substantial chance for it to prevent price from reaching that objective of testing the other side. Thus, it usually causes price, for example, to come down one more time to test support again. If then price finds strong support one more time, chances become very good for it to manage crossing trend band and reach upper threshold. Even break it, eventually, if overall context is an uptrend, as I mentioned earlier. Naturally, this is also valid for the reverse case, in a bearish scenario. Now, let's talk about what happens when expansion thresholds are broken. We'll have two examples. This first one shows that they remain relevant. Initially they can even work in the opposite way, like we see here a resistance threshold working as a support. But, eventually, they will resume working as usual, like we see here it recovering its function as a resistance after a while. It's not advisable, however, to use a broken threshold as a limiting factor soon after the breaking point, as the odds for price to respect it as before become very small, and if it does respect it, it's probably going to be only briefly. Here we have some examples. So, price resumed trending up after going above the trend band, managed to break the upper threshold, then find support over the trend band, and so on. And after that, price visited again the upper threshold band, finding some resistance. But notice, only for a brief moment. And then it continued to go higher. So it's really a complicated thing to fight the trend. In general terms, you better just stick with it and consider changing your bias only after you start to see trend showing some weakness. Here we see that the two next touches to the two upper threshold caused some retracement, but these got invalidated as price went higher again. So, why continue facing risk here? You better stick with the trend. Then, if you see trend getting weaker, you can potentially take some profit or go contrarian after you see it facing trouble continuing. Okay, so, let's see the second example about broken expansion thresholds. This time to the downside. This is again Bitcoin after breaking the 15 minutes lower threshold band. This threshold had been respected for a long time during this big rise. So, once it got broken, all hell broke loose and some good amount of people took profit, including large traders. Many also shorted and so on, causing the major correction. So, it's very important to keep paying attention to which supports and resistances are being repeatedly respected, and once you see those being broken, you can expect price to have a big chance to continue expanding towards that direction. Okay, so now let's talk about multiple time frames. This is a very important aspect to understand. Here we see, again, 15 minutes time frame. Indicator is showing pretty much what's going on except for that brief moment when price really stopped there. Why? Why did price stop there? So, this usually happens because of the influence of another time frame structure. Then, besides 15 minutes structure, we can look for which other one is playing a role here. In this case, I applied the indicator one more time to the chart, and, after some research, testing customized time frames, I found that this was the 10-minute structure approximately. This is important, because if price once again comes to interact with this structure in the future, it can potentially find support. Here is another example, now showing 5 and 10 minutes working as support multiple times. Of course, 15 minutes also working, as presented before. So, price managed to find support there over the 5-minute structure, actually 2 times more after being identified, out of empirical observation. That structure eventually lost the capability to support price for the third time, especially because, as we see, 15 minutes trend band turned bearish. So, the 15-minute structure was going bearish. Then, how can the 5-minute one hold it, right? 5 minutes is not big enough to hold 15 minutes. So, that became an interesting place to make a short trade, from there to the 15-minute support band. And from there, as we saw earlier, it became certainly a great long trade, as price bounced over 15. All this coming from indicator method, plus empirical observation. So, again it's very important to look for empirical evidence regarding where likely supports or resistances are, recognizing that many of these structures move, not remaining horizontal. Of course we have some horizontal supports and resistances, but it's really useful to be aware of this moving characteristic, something pretty unique about this indicator. Okay, now, going forward towards the conclusion of this presentation here. Let's talk a little about bar colors. Indicator helps us see if there is some trend taking place, or if price is consolidating. Basically, for that, it uses green and red colors, for bullish and bearish trends, or bright green and bright red colors, for stronger trends, both respectively. Knowing that helps you build some more confidence on the movement itself, or not. Consolidation, represented by the orange color, for example, is a harder moment to try to pick a direction. But eventually once you see price getting out of consolidation, and into trend, that is more likely to become an interesting place to think about picking a trade. Especially if you see, like on the left side of this chart, price breaking above the resistance band, and getting into a trend mode. Not a coincidence that we see those big green bars there, and then getting into stronger trend mode. One more important thing I would like to show you is that there's a possibility to customize color scheme so to be more friendly to colorblind users. You can look at setting to change that. And speaking of settings, there's multiple ways for you to customize the presentation of the indicator, especially concerning multiple time frames overlays we saw, but also to help manage and reduce chart clutter, for example, in terms of number of lines being plotted. You can decide to just plot the backgrounds, or some part of the structure, or avoid painting bars, and this sort of things. There's some interesting capabilities here for customization. Okay, before concluding, I would like to show you two more things. First is that Price Finder works on different assets as well. No only Bitcoin. For example, here is Ethereum on 4-hour chart. After a bit of research, I found that 100-minute structure was a good support. We got very nice trades here. No to more traditional stuff. For example, S&P 500, 1-hour chart, with 30 and 15 minutes overlays. So, this here is presenting also very nice opportunities to buy the 1 hour, or have some scalps using the 15 or the 30 minutes time frames. This is then similar to the Dow Jones Index. We can see that event on the S&P 500 was likely related with this Dow Jones move to come test the 4-hour support. So, also very cool to see. Then, gold now. Gold very interesting one to research about. Got a bit creative around these custom time frame structures. 700 minutes, 140 minutes, 80 minutes. Really interesting, but also very capable of showing where likely supports will be. As per this chart, gold has some room to fall before reaching support. To conclude this series of examples, here is the Euro-Dollar chart, Forex example. Showing 4-day structure, providing relevant resistance, and also some support. In addition, around the middle there is 1 day and 700 minutes also showing where price would likely find resistances and supports. Really nice. So, indicator is available at the moment. Beta phase ended December 1st this month. Again, thank you very much to all participants. And if you want to test it out, you can try it for 15 days, free of charge. Hopefully it can help you grab some good trades. And then contact me for licensing it. It's available as a 6 or 12-month subscription. Alright then. Thank you very much for your time and let's all be successful trading together. Bye.